Hi, everybody. Thank you very much for joining us today again for our next episode of Learning with Expert series. And today, again, we have our special guest, Sal Tomaselli, our famous mortgage broker. Hi, Sal. Thank you very much.
Hello, everybody. Thank you,
Hello.
Eugene.
Certainly, my pleasure. And today, our conversation will be dedicated to our first-time home buyers. Sal have a few products, actually more than a few, I guess, that specifically designed for the first-time home buyers. But I would like to start with a question from your experience, Sal. What would you suggest for the first-time home buyers? Where would they need to start? What do they need to think first before getting anywhere else?
Okay, so thank you. And just to clarify, you know, thank you very much, Eugene, for having me on today. I appreciate working with you and your team. And I'm the owner of Professional Mortgage Solutions. I'm the president. I have about 35 years experience in the business. So, pretty well versed in the various programs that are available. So I think the starting point, as a first-time home buyer, it seems like a very daunting, giant, weight, to get started. And companies like mine, what we do is we simplify the process, and we also advise the buyer as to what the best course of action is. And so what's really important is to come see somebody like myself very early on in the process. And the reason being is that we can guide you as to if anything needs to be fixed before you start looking at homes. It also gives you a very good idea of what you could afford. What I like to say about our company is we're like a boutique mortgage company, and we're experts in structuring the deal. And so we have very unusual situations sometimes. Sometimes people have unusual work situations. They have unusual situations with their assets or how they're going to get them, their funds, situated for the purchase. And sometimes we deal with the clients, when they're, maybe they're coming into the country and they're not citizens, and they're resident aliens, or maybe they don't even have a green card. And so there are a lot of different options for those people. I mean, everybody comes to this country, to look for home ownership and security. And so it's a really important service, to provide. And a lot of times I tell people, there are certain things to avoid. So if you like, I could get into some things to be wary of. So this way, people will know what is, what they should be doing and what they shouldn't be doing. Okay. Because
good idea, I guess.
That's really, really important. So
yeah.
So usually we have the 10 mistakes that people 10 things to avoid. So what I'm going to do is I'll bring up a little infographic. I'll share my screen with you, and we'll kind of walk through that. So I'm just going to upload that right now. And can you see my screen, Eugene?
Absolutely, yes.
Okay, great. So essentially, one of the things that we tell people before they're buying, at the time they're buying a home, or just before they're about to buy a home, these are roadblocks that can cause problems. So this is really important because people don't understand the interaction of, how the bank looks at qualifying you. So one of the biggest mistakes is don't buy big ticket items. People, when they're ready to buy a house, they get very excited and they say, oh, we got a new house, we got new cars, we'll get,
Mhm.
and what they're doing is you're increasing your expenses, and by doing so, you may be hurting yourself in your purchasing power as a
Mhm.
buyer. So we always advise wait to buy any big ticket items after the house. The house should be your biggest ticket item. Don't incur any debt or reduce your debt prior to buying a house, because this way you can afford a bigger house, a better house, a more expensive house.
Mhm.
We also tell people try not to quit or switch jobs, okay? Because again, when you're during the process, it's the lenders look for stability.
Mhm.
And so if you switch jobs, that can cause some instability. Now, I'll say that if you're making $100,000 a year and you have an offer to make $150,000 a year, 100, a higher salary,
Yes.
um, as long as it's within the same industry, it generally won't present a problem.
Mhm.
Okay. But what I really advise clients not to do is to to switch from being a W-2 or a salaried individual to a self-employed individual, because
Mhm.
that basically puts the brakes on getting any kind of lending for about 2 years, because the banks are going to want to see you as a self-employed individual. They want to see that it's a viable firm, and their benchmark for checking that is about 2 years. So you never want to have anybody move from a salaried position into a self-employed position at the time you're applying for a mortgage. The day after closing, you could make a life decision and a change, but prior to closing on the loan, you'd want to keep your job. The third thing is don't open any lines of credit. Don't take any, personal loans, because all that's going to do is decrease your buying power.
Mhm.
Okay, because you'll now be saddled with this additional debt, and that additional debt will work against you, and you'll qualify for less of a home. We always tell people don't pay your bills late. Banks look at your ability to pay and your willingness to pay, and that's through what everybody kind of knows as a FICO score or credit score. Paying bills late is really, a red flag for banks, and they, automatically it'll cause your credit score to drop. When your credit score drops, you'll be eligible for fewer programs, or you might just box yourself out of getting approved at all, depending on the severity of that of those late payments. Um, we always say don't ignore questions from your lender or broker. So, you know, sometimes we're here to help. We work as a team with you, with the buyer, and sometimes we have to explore what's going on and figure out a solution. That's why I call ourselves expert deal structurers, because what we do is sometimes you have a situation, maybe money has come from overseas, or came from a source that's hard to document, and we can find solutions to those problems by getting the truth from the client, and then help to structure it. Sometimes we can get exceptions from lenders. So it's really important to answer us as quickly as possible.
Mhm.
um, the other thing you should avoid is don't run your credit multiple times, because every time you run your credit, your score may drop, but it may or may not drop. However, every inquiry has to be addressed. So if you go to 5 different companies for a mortgage, well, we can explain that and say, well, I'm shopping for a mortgage. But if you go to a car dealership, a boat dealership, a mortgage company, now the lenders are going to say, well, this individual is looking for a car, they're looking for a boat, they're looking for a mortgage. What's going on? and that typically will cause your score to drop.
Right,
And
right.
so that's something that we kind of advise you against doing, because we don't want to cause confusion in the home buying process. Okay. The seventh thing to avoid is don't make large deposits into your bank account unless you can document those large deposits. And I'll give you an example. Sometimes people have, we'll call it mattress money or savings at home or cash at home, and they're about to buy a home and they deposit 7, 8, 9,000, 10,000 into the bank. But they really can't document where that money came from, because that was accumulated over time, and that causes a problem. Because if you can't, now with Homeland Security and all there's something called a suspicious activity report or an SAR report, and so making a large cash deposit into a bank is not advisable. Even if it's legitimate money, it's just that the bank won't be able to utilize that money towards your purchase. So anytime you have something like that, we always advise to discuss it with us so that we can, apprise you and give you the right advice. So try to avoid making large deposits. The other thing you should really avoid if you're planning on buying a home is not to co-sign for someone else, another buyer, because what you're doing is you're limiting your buying power, because now you're going to be saddled with that additional debt of that person that you're co-signing for. So you really don't want to do that. You want to kind of, you could help somebody in other ways, but if you're planning on buying a home, don't help them by co-signing on their loan. That's not a good choice. The ninth item is don't change bank accounts. The banks look at the last 2 to 3 months of activity. And so what happens is you really don't want to start switching or moving money around. Leave everything where it is. We will document it, and then we will give you advice on how to move that money in a way that can be documented and it won't be questioned by the lender. Okay. And then the last item to avoid is don't take out any payday loans or cash advance loans. That's something that always, even if, so for example, furniture companies, they'll give you 24 months free interest, or they'll give you an advance, of credit. That hits your credit report, and they see that on your credit report. And even though you're not responsible for making a payment on that immediately, they will still saddle you with that debt. They will still, kind of calculate that debt. So if you want to make, if you want to take out any cash advances, or, we really don't advise it. But if you have to do it, I would highly recommend discussing that with your mortgage professional before you do so, because not every action here creates a problem. However, it does have to be discussed, and so that's basically it. So those are the 10 things, 10 roadblocks to getting a mortgage. I will send this over to you so that you have it and you could upload it.
Right.
So that's one of the items that I would would focus on.
That's a
But a
huge
lot of
item.
this would be, I'm going to just stop sharing my screen. I'm going to come back on. So that's
Well,
what I would highly recommend.
this is a
Okay.
great big item, and thank you very much for that. Yes, I will attach this file to the video. Obviously, this file is available on your website, which
Okay.
link we're gonna attach to the video. And I would say probably if we summarize all those 10 items, is that whatever financial move you want to do before getting into mortgage, I would say if you're not sure if it's going to affect you, I would say talk to the mortgage professional first. Talk to you, and then you will advise whether or not this is a good idea to do before getting into mortgage, or maybe just postpone it.
Right. Absolutely.
Okay.
All right.
So let's talk about the actual product that you have in stock for first-time home buyer. That would be a good idea for the first-time home buyer.
Great. Thank you. So one of the really exciting programs that just recently came out is the 1% down payment program. So traditionally, as a first-time home buyer, you can get into a home with 3.5% down, okay, which is also relatively, the bank is financing 96.5%, almost 100% of the deal. But, the federal government is really focused on making home ownership, opening up home ownership to as many people as possible. So they've, rents are up, and so, there's so many benefits to owning a home, because you get write-offs, you can write off mortgage interest, and you can write off depreciation and various things. And it's really a tremendous hedge against inflation. So things got even better just recently. The Fannie Mae, Freddie Mac just announced the 1% down payment program. This is a program that's offered through select lenders that we deal with. I'm going to share my screen and just kind of give you a little overview of what it looks like. Eugene, can you see my screen?
Yes, certainly.
Okay.
If you could just make it a little.
Yep, I will. Let me just try and make it bigger. Let me see what we can
zoom in.
do to increase the size of this.
Yes.
And there we go. Is that better?
Yes.
Perfect. Okay. So the way the program works is it works very similarly to the 3.5% program, but basically you put down, this is a partnership with lenders where you put up 1% and the lender puts up an additional 2% of funds. So the lender will they don't partner with you in ownership, but they partner with you in your down payment, putting down a down payment. And essentially what they'll do is they'll make up the difference. The lender will add 2% of their own funds to the deal. So it allows you to get into a house as a first-time home buyer with just a 1% down payment. So for example, $500,000 house, or your monthly your total out of pocket could be $5,000, and you could be a homeowner with a relatively small amount of money. Now we've met with some challenges with this. Because when you have a seller, the seller will, the seller or the seller's attorney will say, well, we're not going to approve somebody with a 1% down payment.
Right.
And what we've been able to do to get around that issue is that we can pre-underwrite your file. So this is very important. If you come to us at the early stages before you find a house, we can actually pre-underwrite your file, get you a mortgage commitment for that 99% financing. And then when you go to a homeowner, you're not going to them just with a pre-approval letter. You're actually walking into the transaction with a mortgage commitment. And, as a realtor, Eugene, you know how hard it is to, convince a homeowner to accept the deal. And they want to have confidence, and, they'll have confidence in you and your abilities.
Yes.
And this is just an extra step that we take at Professional Mortgage Solutions to get you an actual approval letter, so that when you walk into a homeowner, you can actually present the actual mortgage commitment and say, look, the only thing we have to do here is get a viable appraisal. If the house appraises, the people are already underwritten and they're already approved. So this is a great tool. The fact that we're able to get a commitment in advance of going to contract is really key. I'd like to point out that not every lender permits that. So, we have lenders that will give the commitment in advance of the property being selected. And that's a tremendous tool, a shopping tool. I think, would you agree that's helpful when you're dealing with sellers?
This is absolutely outstanding. The only thing I wanted to ask you, well, one of the things I wanted to ask you about that is, what does it take for you to accept that buyer and tell him and agree to give him that mortgage commitment letter?
Well, that's a great question. So,
So
when we start the
what am I
process,
supposed to give you as a first-time home buyer for you to agree to work with me and do such a thing for me?
so when we sit down, so typically when we start working with somebody, we're going to gather information as to their income, their assets, and it's really pretty straightforward. And what I'll do is I'll just bring up one of my standard emails that I send out to a client before when I have an initial conversation. So that it's a really easy process. I know there's sometimes some call avoidance with borrowers. They get nervous. They're overwhelmed by this. Companies like mine, my staff is committed to making this a very easy process for people. Okay. And so there's nothing to be afraid of. Just tell us the scenario. We'll figure out the right solution for you.
Right.
And so what I'm going to do is I'm going to share my screen again. So I'll just show you. So to answer your question, what I typically ask for from a client are the last 2 years of tax returns, 2 years of W-2 statements, 2 pay stubs, and 2 months of bank statements. So it's pretty simple, and 2 pieces of ID.
Okay.
These are things that are, they all have, that everyone has at their disposal. Now, if you're self-employed, you may not have pay stubs, and you may not have W-2. So it actually is a shorter list if you're self-employed. I just need the 2 years of tax returns.
Right.
But if you're a salary person, typically we're going to need, the 2 pay stubs and the 2 W-2s. Now, what I'd like to point out, and I'm just going to kind of jump back in. What I'd like to point out is we don't necessarily need all that. We don't necessarily need to present all that information to the lender. Sometimes when we run the file through automated underwriting, we only need to produce a pay stub or 2 pay stubs or a W-2, 1 year of tax returns. So everything, the amount of documentation that is required by the lender could be cut down significantly. We handle that for you, for the buyer. And it's really, really important for them to start the process early on. So when you have somebody that's just starting to look for a home, my advice would be, the number one advice would be to speak to somebody like myself, speak to somebody on my team, to basically pre-qualify you and kind of give you an idea of what you could afford. Sometimes people could afford a lot more and they don't want to spend that much. Sometimes they have high enough incomes where they could afford a much more expensive home, but they feel more comfortable with a certain payment. Other times people are reaching for, something that's, really special, and they want to buy a more expensive home. And we could figure out ways to get you approved for that. And we look at other alternatives. Sometimes it's bringing in a co-signer. Sometimes it's putting down more money. So there's various ways that we can, make that happen. All that being said, the most important thing is come in, talk to us. There's no charge. There's no fee up front. We don't charge an application fee. 99% of the times, the lenders are actually going to compensate us for the loans. So typically, you're not even going to pay us. You're going to get a credit from the lender for whatever we get paid, paid for the lender for processing the loan. But you get the benefit of our expert advice and expert deal structuring. So that would be my advice to the clients.
I got you. Thank you so much, Sal. Listen, it was really great. It was really helpful. I hope the guys learned a lot. and we'll see everybody next time for our program. And please use contact information below to get in touch with Sal directly for mortgage questions, with me directly for real estate market questions. And we'll see you next time. Thank you. Thank you, Sal, for coming.
Thanks, Eugene. Thanks for having me. Take care.
Hello, everybody. I'm Yevgen Pitelman, your local real estate agent, and thank you very much for joining us today on our next episode of Learning from Experts. Today, our guest again is Sal Tomaselli, our mortgage professional. Hi, Sal.
Hi, Eugene. Thank you for
very
having
much
me.
Yes, you're welcome. Always a pleasure working with you. Sal wanted to share with us today his next product. And this, in my understanding, concerns for both first-time buyers and for investors. So Sal, please tell us what it is.
Well, Eugene, thank you for having me on again. I appreciate it. So today we're going to talk about a very interesting product. We're going to talk about a product that is kind of like a no-income check. It's kind of like a quasi no-income check. It's very interesting. It's designed, it's called a debt service coverage ratio loan. A little bit complicated, you know, a little hard to remember. The acronym is DSCR. But it's been a really valuable product for us, especially for clients that are self-employed and might not show, you know, their income on their tax returns, you know, or have low income shown on their tax returns. So we've been using this product. It's been a pretty effective tool to get people into homes, you know, make home ownership a reality, make investing in real estate a reality. So I'll just kind of dive into how it works really simply. So just so I don't know if everybody knows, my name's Sal Tomaselli. I'm the president of Professional Mortgage Solutions, and I have a team of loan officers, processors, support staff that are here to help guide clients through the mortgage process. I work for you. I don't work for the bank, but I do place loans with over about 35 different lenders, and 99% of the time, those lenders will pay us. So you kind of get the best of both worlds. You don't pay us, and we work on your behalf and we advise you. So it's pretty cool setup. And okay, so that being said, what I'm going to do is I'm just going to bring up a screen here and kind of give you some highlights. I'm going to share my screen. Eugene, can you see my screen?
Yes, I see the program highlights. I see the logo. Yes.
All right. So this is a program. So it's pretty interesting because, and again, it's called the Debt Service Coverage Ratio Loan, or DSCR. You don't really, that's really not important for you to remember that. What you have to understand is the concept. The concept is that if you can't produce income, the bank will look at, you know, for an investment property, and this is a great loan for investors. They'll look at the rental income of the property and only look at the rental income for that subject property. So you could own 20 other properties, but they're just going to look at what's the rental capacity for this property and will it cash flow. So, you know, what's nice about this program, there are no tax returns or W-2s required. Okay. And it's not a bank statement program. A bank statement program is a program where you have to produce 12 months of bank statements and they kind of figure out your income by cash flow. You don't have to do any of that. This is a really simplified program. It really just focuses in on how much is the rent for this property. You know, how much is it going to rent for? The good news is, in today's market, as you probably are aware, Eugene, rents are up, right? So, you know, there's a high demand for rentals, and that's driven the price of rents up. So a lot of times we find that this program could support, you know, you could buy a property very easily. And they've made it so simple. You only have to produce 1 month of bank statement. Okay. Um, you know, you could use 100% of gift funds for the down payment.
Mhm.
So that's really a great nuance that has just recently come into play. That you could use gift funds to purchase a property. So you're an investor and you don't have any money. I mean, you just have to produce 10% of your, you have to source about 10% of the money needed towards closing costs. But you could get 100% gift from an uncle, a relative, and buy a piece of property. And in the past, you were never ever able to do that. So this is a really great feature of this program. Is that they allow 100% gift funds.
So the whole
And
family can contribute, or any friends, anybody can contribute to your purchase.
right, it typically, there are rules associated with who could give you the gift. It typically has to be a relative or an
Well,
employer or whatever. But we would walk you through all the details on that, and how to structure that. And then the eligible, the property types on here are 1 to 4 families, condos, planned unit development. So you have really a wide array of investment properties that you could pick up.
mhm.
And they allow up to 80% financing on this program. So, which is also really a very nice nuance, because in the past, programs like this, they would lend you 70%, 65%, or 70%.
Mhm.
Now they've kind of ratcheted it up to 80%. So somebody could buy a property, but less out of pocket, put 20% down, buy an investment property, not show your tax returns, not have to show your income, just rely on the income from the property, and you could own that property. And the other thing that really is a really nice nuance that's relatively new is the fact that you can get loans up to $2 million. So a $2 million loan, you could buy a pretty substantial home rental property. And the minimum FICO score, credit score, only has to be about 660. So there's a lot of benefits to this program, and that is it's relatively new. I'll just stop
Mhm.
sharing my screen. I'll come back
Mhm.
on. But this is a great product for investors,
Mhm.
and I've used it myself, for purchasing investment properties, and so you know, I'm also I've also kind of kicked the tires on this type of program, and I've gotten these type of loans, and it's phenomenal because you could buy. I bought a rental property out in Huntington, Long Island, and
Mhm.
uh, you know I used this program, and I had my tenant in place, and my tenant basically covers my mortgage, and he pays the mortgage he pays the rent every month, and basically goes to the mortgage. And it was a really easy loan to obtain because I didn't have to produce really, I had to only produce minimal documentation, no income, no tax returns.
Mhm.
Just they relied on the income from the building. So that's a great program,
Mhm.
great for investors. So just wanted to introduce that product to you and your clients.
Thank you very much. Listen, it's really, really interesting. So basically, the only thing you need to produce, so the mortgage will be based on the rental produced by this building, and the only rental you have to provide like 1 month's rent. That's all.
Correct.
I see.
Correct. It's really, really simple. Essentially, when the appraiser comes out to the property, they assess
Mhm.
what it could be rented for.
Mhm.
Um, Obviously, you as the realtor will be contacted at the time of appraisal, and
Mhm.
you can actually show the appraiser the current rental comps, in the market. That's what our realtors do, and they'll kind of guide and the appraiser. Ultimately the appraiser is going to make his own analysis. However, knowing what the rental market is really important, because that's going to drive the sale
Mhm.
and get this loan closed. But it's a great program for investors. The other nice part about this program is that you're allowed to put properties in an LLC, so you don't necessarily have to buy it in your personal name. So you can kind of limit your liability. And that's something that most traditional lenders didn't allow in the past, but this program is really designed for investors. So you're able to, that's something that's maybe a little more sophisticated. If you're a first-time investor, we could walk you through that.
Right.
Obviously, you could advise the client on that as well. I'm sure you've come across it many times, but we come across it too. And that's a great tool also, because you could limit your liability to that one property, put it in the LLC, and not have to show any income and close on the property, very effortlessly. So just another product that I think is helpful.
Seems like it's a great one, and we'll advise everybody who's interested in this product to get in touch with Sal directly. All information is at the end of this video. And if you need any help with real estate questions, I'm your local agent. My name is Yevgen Pitelman. I'm with Coldwell Banker Real Estate. And thank you, Sal, very much for all this information. And we'll see you next time on our next video. Stay tuned. Thank you.
Thank you. Thank you, Eugene. Thanks, everybody. Bye-bye.
Bye-bye. Hello, everybody. Again, thank you very much for joining us today for our next episode of Learning from Experts. And today, our expert guest is our famous mortgage broker, Sal Tomaselli. Hi, Sal. Thank you very much for coming.
Hi, Eugene. Thank you for having me. I appreciate you having me on again. Thank you.
Always a pleasure, Sal. And today, Sal will share with us the concept and how we can use the product called reverse mortgage. Sal, please, let's get right into it.
All right. Well, thanks again for having me on. I really appreciate working with you and your team, and it's such a pleasure dealing with you and your clients, and so today we're going to talk about an interesting concept. Today we're going to talk about an interesting concept, and we've come across. I have personal knowledge of this. This is we're going to talk about reverse mortgages, and these mortgages are really designed for people over the age of 62. There are exceptions where you can get one of these loans. There's a product where even if you're at 60 or older, you can get it. I have personal experience in it. My grandfather, when he was 95, ran out of money and needed a line of credit. And we applied for a reverse mortgage, and we got him this line of credit. And what it enabled him to do was basically live out the rest of his life. He lived to 101, and he lived a very long life. And he had money to support himself. So it was great, because a lot of seniors have houses, and they own these houses typically free and clear with relatively small mortgages on them, and they have a lot of equity in the property. But as you get older, it becomes harder and harder to pay with inflation and rising prices. And so what happens is, sorry, everybody wants to talk to me today. And what happens is that there's an interesting concept that I'll basically go into what is a reverse mortgage, and then how it's being used by the younger generation to buy homes. Okay, so reverse mortgage is a little bit counterintuitive. It's you get this mortgage, and as long as you're over 62 and own a house and have some equity, you can get this mortgage, and it's great. And then you're not required to make any payments on that mortgage, which people, when I say that, they stop, and it doesn't compute, right?
No.
And what happens is you're not required to make payments. The only thing you have to pay is the taxes and the insurance on the property, but it allows you to live in the property for as long as you live, and it's kind of a quasi, it's a government program. It's a HUD program typically, and it's designed to help senior citizens live out the rest of their life in the comfort of their own home. Now, we've recently come into scenarios that are very interesting because the seniors are saying, hey, I have this house, I have all this equity, my house is worth 800,000, $1 million, $2 million, whatever it is, all this equity. They bought these homes a long time ago, and they've paid down their mortgages, and they're like, I want to help my kids, I want to help my grandkids while I'm still alive. So we see this trend taking place with people. And what they're doing is, and the grandkids say, look, I want to buy a house, but I can't afford the larger down payment. I can't afford to make this down payment. And sometimes when we sit with a client and we have parents or grandparents that want to help the next generation or two generations down, and they say, hey, I'll take the money out of I'll lend you the money. I'll give you the money, not lend it. I'll gift it to you because I'm going to give you this money anyway when I die. I'm going to give you this house anyway when I die. But the kids now want to buy a house today. They want to get into the market. They want to, buy a house. We all know that buying real estate's a phenomenal investment and it grows over time, especially in our market in New York. It's almost guaranteed that it's going to go up. What does it go up every year, Eugene, approximately?
I would say anywhere in the 4 to 6%.
Yeah, I agree with you. 4 to 6%. So if you compound that over time, it's the earlier you get into the game, the better it is. So what we've started doing is we started dealing with seniors. So sometimes maybe a young couple comes to us and they say, we want to buy this house, but we need short on down payment. And we look at options and we say, do you have a parent or a grandparent that has a home that could be utilized, to assist with giving you the down payment? And all of this is permissible by the banks. The banks allow gifts to come from relatives, and so it works out very well. So on the reverse side, I'll just share my screen with you. I'll share one of our, our flyers that we give out, and we have people. Eugene, can you see my screen?
Yes.
Okay. So we have seniors that say, hey, should we go reverse? Should we get a reverse? And we have a division. Professional Mortgage Solutions has a division called Go Reverse Mortgage, and that's strictly our reverse mortgage arm. My resident expert in the reverse mortgages is Jason Black, and this is his contact information. Jay's my right-hand person. He works side by side with me, but he knows the reverse mortgage market inside and out, and he's very good at structuring those deals. And basically, it's really simple. If you're 62 and you own your own home, you get to eliminate the monthly payments. People use it for their own purposes. Sometimes as seniors get older, they pay for in-home care. A lot of times seniors say, hey, these seniors that we have pictured here, they're young, they're in their 60s probably, maybe 70s, late 60s. I have a lot of people who use this product to travel the world. They retire, they travel the world, and they also help their kids or grandkids, become homeowners. So this is something that we started, a nuance that we started offering to clients. And what's really interesting about this is that there's a lot of sophisticated structures with, when people start doing estate planning, they put properties into trust sometimes. And, as you get older, they do Medicaid asset protection trust and various things. This product allows those structures. So if you go to a normal bank like a Citibank or a Chase or, Wells Fargo, they don't offer these products. Okay. We've actually developed a niche at Professional Mortgage or our reverse mortgage division, Go Reverse. And our website is goreversemortgage.com. So you can get more information. But I'm going to share one of my other screens. And what's interesting is when seniors start to do some estate planning, sometimes they put it into an irrevocable trust or a Medicaid asset protection trust. These are very highly technical terms, but if you're getting older, you get familiar with those terms. You don't care about this when you're 20 or 30, but you do care about it when you're 60 or 70 because you want to protect your assets. What's cool about these programs is that it allows the homeowner to put this property into a trust or use what they call a life estate and get money out. Okay, you can get a line of credit, a lump sum distribution, and this works for loans up to $4 million, which is pretty significant. It's pretty high. It's pretty up there. So this is an interesting concept. Just to recap, and I'll stop sharing my screen. I'll come back on. So just to recap, you have a buyer that's in their 20s or 30s. They're struggling. They're trying, and their relatives want to help them out. And they can give their kids or their grandkids money to buy a house while they're still alive and get to see the fruit of their labor and get to see that they were able to help their grandkids or help their children by getting a line of credit or getting a loan, a reverse mortgage loan. And the great part about it is the senior doesn't have to pay for this mortgage. They don't make monthly payments. And the children get to buy up the home that they're looking for with the assistance of the senior giving them that down payment. So it's a little complicated. I hope I was clear on that. Does that make sense to you, Eugene?
Well, yes, it makes sense. So basically in the purchase, let's say if the young generation buying the property using help from the parents or grandparents, so the grandparents also involved in this whole mortgage process. So it's like sitting at the table with you. It's not going to be only the kids, but also the grandparents, and they all will be joining in.
Correct. And that's basically to get a large or a sizable down payment so that the children could buy a home while that, and the grandparents are still alive and they get to see their kids get into a home. Because home ownership is becoming increasingly more difficult because values have gone up, prices are up. So sometimes you need assistance, and this is a great tool to help people get into homes and become homeowners. And when this is kind of very interesting because it's got a feel good aspect to it because the relatives
generations
are helping, or even people that say that think they can't help, they actually can, because on the reverse mortgage they don't have to prove they have to prove limited income, maybe just a pension or social security or something like that, or rental income. So it's really the burden of showing income for the senior to get the reverse mortgage is really, the bar is very low, and so it's a really easy loan to qualify for as a senior, and it could help that grandchild or child get into a home. And so it's a really great combination loan. It's something that we've introduced to our clients and our client base, and a lot of our realtors are using this product. So it's something that I just wanted to make you aware of. So it's pretty interesting.
Thank you so much, Sal, for that information, and I hope everybody learned a lot today. And then if you need more info, obviously you get in touch with Sal directly. His information is underneath this video. If you need to know more about the real estate market, feel free to get in touch with me. My contact info also is here. Sal, thank you so much. We'll see you next time, hopefully soon, and have a great holiday season. Bye.
Thank you, Eugene. You too. Thanks for having me on. Take care. Bye-bye.
Bye-bye.